In August 2025, an executive order asked the Department of Labor to review whether crypto and private equity investments should be allowed in 401ks. Should you be investing in them? We're going to discuss that today on the other side of the intro. Good morning, good afternoon, good evening. Welcome back to another episode of Playbook of the Wealthy. My name is Dave Grant. My co-host is Heather Townsend. And today we are talking about whether you should be investing in crypto and private equity inside of your 401k. If you haven't been to our podcast before, we split our podcast usually in 3 sections. Today we're going into 2. We are diving into content, and then we are sharing a bit about our personal, professional lives, whatever we feel like sharing. But we are doing a deep dive answering all your questions about this private equity, alternatives, crypto, and 401k.
Because man, Dave, this has gotten a lot of noise on the news and social media. People are having a heyday with this executive order.
Crypto bros, where are you? You're coming. We feel you.
Hi.
So let's give you a little bit of a background. In August 2025, Trump issued an executive order to the Department of Labor to suggest that they review, read into my words, whether alternative assets, his words being crypto and private equity, should go into 401ks. Now we're in this review stage. Now a lot of plan sponsors are saying, yeah, we're open to it. Let's figure out what to do. We're going to take you into a little bit more detail about whether this is right or wrong for you and what you should look out for. Heather, I'm sure people are confused. What are alternative assets?
This is a broad definition. Commodities, crypto, private equity, private credit, infrastructure, hedge funds. I mean, I could keep going, but this is your non-typical index fund. You're not finding these on Schwab or Fidelity. These are private investments.
So these are typically accredited investors that get access to these. Mm-hmm. And now it's becoming spread wide open for everyone else.
We will see, but that's the plan. Yes.
Okay. So I'm sure most people are aware of what crypto is. Various coins, various exchanges, you can buy the coins and they go up and down. Private equity looks a little different to people who are in the industry versus people who are looking from the outside in. Essentially, private equity is private companies buying other private companies and doing what they want with them. And then private investors can buy into that company. And if the company goes up in value, then they get a return on their money. That's one form of private equity. There's a lot of different forms. So that's why this is taking a while to figure out how is this going to look.
And this is private equity is buying into companies that are not, you can't invest in the stock market. That's the easiest, simplest way I could put it. They don't have a ticker. You can't go find them on the stock exchange.
So why does this have people excited? What?
Oh my God. You know what private equity kind of reminds me of? You know the movie Pretty Woman? Everyone knows Pretty Woman. Richard Gere, that's who the actor is, right?
Mm-hmm. It's your story. You should know.
Well, I'm not good with actor and actresses' names, but Richard Gere, right? He's buying other companies and then selling the pieces off to make more money. That's private equity. That's one part of private equity. But think Richard Gere, right?
For our female listeners, go watch Pretty Woman and you'll understand it. Is that where you were going?
I mean, I thought it was a good example.
It was.
Thank you. The news is a lot of noise. We all know I feel that way. Look, nothing is changing yet. I think everyone's making this a really big deal, and nothing's really changed yet. So for listeners that don't know about 401k plans, employers or fiduciaries, plan sponsors, people who create these 401k plans, they are required to be a fiduciary, meaning they have to, they are liable for the type of investments that they put in a 401k. So if they put one with really high fees or is not a great investment, yeah, there's some liability to them. And so previously, because there is a lot of risk that comes with alternative investments and fees and lack of transparency, plan sponsors or 401k companies have typically not wanted to put these type of investments in their investment lineup. But in this executive order, what I found interesting is Trump is going to, he proposed a safe harbor where if these 401k companies follow these sets of rules, they're not going to be liable.
This whole thing just screams rich man to me, because it's a case of, okay, everyone has done perfectly well in their 401k without investing in private equity. The only people who have not done well is private equity holders, because they want more and more money into their company. And so the way that they get more and more money is they expose themselves to a broader market. Now, why do people want to invest in private equity? Well, the glamour of it is, well, it's private. It's exclusive. You can get higher returns. There may be more volatility, but we're going to do stuff that is you can't get access to in the public market, just the regular stock market. It's mysterious. That I don't like. I don't like investing that is mysterious. There's a black box. I like transparency. I like things that are cheap. I like things that do what they say on the tin. I don't like things that are controlled by people in a boardroom and we don't understand what's going on.
Isn't that every public company, Dave?
No, because a private company doesn't have to tell you what they're doing.
True,
Public company has shareholder meetings.
I know, but do we really know what's going on in those board meetings? But fine.
Conspiracy theorist.
Okay, going on. Okay, but the why. I mean, let's just not talk about private equity. There's a lot. I mean, this is opening up to infrastructure funds, REITs. I mean, this is not just private equity. It's alternative investments. And the why. So Trump's why is because big pension funds, think like Harvard's endowment fund, normally do have a lot of these alternative investments. And they can outperform a typical investment portfolio. Here's the thing, though, and this is what gets me. It's a very narrow selection of funds or managers that have outperformed.
Mm-hmm.
It's a very short list. And so when I start thinking about this, to me, it's going to depend on what fund is in there.
Can I play cynic?
Of course you can.
What type of investments is the regular investor going to get in their 401k? I have a feeling they're going to get the bottom of the barrel private equity. I don't think they're going to get the cream of the crop, because why? Like, these are just your Joe Blow on the street. It's a normal person. The private equity and alternatives market still wants to remain exclusive. So they want their high net worth investors in there. So I have a feeling that the bottom of the barrel private equity is going to flow into 401ks and it's just going to be trash.
That is a very valid concern. And I'm concerned about that too. Among liquidity, how does that play out, right? Like in the funds that my clients are in of stuff like this, we have to wait.
Because I think that plays into, well, what if I'm at a company with a 401k and I've invested in some of this and now I'm changing jobs and I want to roll my 401k over?
Great
Can
question.
I do that?
Great question.
We don't know yet. Like, are you locked into these funds? Are you going to take a haircut if you decide to liquidate early? Because that's typically what happens, is you'll take a hit on your initial investment or your current investment if you decide to liquidate early outside of the terms. So is that going to be worth it if you're looking to, not job hop, but even just remain flexible and liquid in your 401k?
The people I'm the most concerned about are I would say, not financially literate. Like, they might go on past returns. They review the 401k investment sheet, right? And they go, oh, last year, this one made the highest return, so I'm going to select that one. And they have no idea that it's not liquid, that if a fund manager changes, it might not perform the same as it previously did. Mm-hmm. Right? PIMCO, bond manager guy, bond guy, whatever his name was. That's a great example of that, right? So
did you just say that Bill Gross was the PIMCO bond guy, whatever his name was?
There's a term for him. What's he called? The bond guy? But once he left, performance, to my knowledge, went down. It wasn't what it was anymore.
I mean, it could be similar if you have an energy private equity fund. Did really well in 2023, and then, like you said, you're looking at past returns. If you then select that, energy didn't do well after that. Now it's being weird because it's now ticking back up, but it's a case of, like you said, you're going to invest based on past returns or things that are hot, and everyone's piling money in. If you don't know what you're doing, you're going to just lose your money.
In the safe harbor rules that Trump is proposing, apparently there are supposed to be disclosures for these types of investments, which I think that's a good thing. There needs to be certain disclosures that people read and are aware. But it's like credit card interest and all those disclosures that come with credit cards. Who reads that?
Exactly.
And yet we have a huge credit card debt problem in this country. So concerned.
Yeah.
Okay,
All
but
right,
going
we'll
back.
I'll talk about positive.
Okay.
If you hit a flyer on a private equity fund in your 401k and it does really well, it's all tax deferred growth.
It's amazing.
Like say your investment went from $100,000 to $250,000. You don't have to pay any taxes on that. This is just flying until you hit retirement and you start to take money out. So that's a really big win, because usually private equity is all taxable money.
Well, and from someone who has seen KKR K1s, remember I've prepared a lot of wealthy tax returns. They're really complicated K1s and come with a lot of tax complexity if you're in those funds. So if it's in a K1 or if it's in a 401k, all that doesn't matter. You don't have any income you don't have to report any of that. You don't have to have all the tax complexity because it's in its little shell. The why Trump put this executive order is his reasoning is that the returns are outsized. He wants Americans to have access to these investments that typically have only been for really ultra high net worth individuals or pension funds.
Can I call BS?
Well, I mean, yes.
I'm going to lose half our audience here. I am Switzerland in politics, but these things just don't happen because of outsized returns. These come from people who sponsored his campaign. And they had an agenda of, we'll give you money if we can do this, and you put a proposal forward. So I don't think this was just out of the kindness of his heart.
This is
politics. And it's hard looking at all this with the stock market having gone up almost consistently over the last 10 to 15 years. Like, we've had a few outlier years where it's gone negative, but most of the time it's gone up. So it's almost like, why would you want to change course now? That's a hard emotional thing to get over, of why would you change what's winning? And the answer is going to be, well, winners turn into losers all the time. And so you should be spreading out your investments. And this may be something that you want to use, but I'm on the no fence as of right now. I would love to see more information and see how it plays out, see what plan sponsors include. But for your regular everyday Joe, I don't see the value.
No, for the everyday Joe, they need to be in a target date fund and just keep adding to that 401k and go. But for our clients, it is interesting. The crypto bros, I'm like, oh boy, what are they going to do? Or crypto gals, I know a few. Like, what are they going to do? Put their whole 401k in crypto? That's like another concern of mine. But, can't save everyone. But 5 to 10%, they're young, 20 to 30%. And these are, if good funds, not the bottom of the barrel, get added. Okay. Am I going to start putting my clients in crypto? No. I think why this is getting so much noise is it is a big change. I think the liquidity and fee transparencies, that's got to be addressed. Mm-hmm. How are they going to teach these 401k fiduciaries how to do the due diligence on these funds? And I would hope that they have to review every year.
Yeah, I mean, this is going to create a lot of compliance on the plan sponsor, which in turn may increase 401k fees. Because now you're employing more people, they're going to have to do more education to plan participants, and the only way they get paid is by having a 401k fee that's paid for by the company, which in turn passes the fee on to the employee. So it's another thing to look out for. How expensive is your 401k now? And is that going to get more expensive should this get included? And in turn, should you be then using that 401k if you can use other investment vehicles that are cheaper? I'm going to give you my summary.
Are you doing the bow?
I don't want a bow. I don't know what I'm going to call it, but it's going to have a cool sound effect regardless. I'm not in favor. If you are thinking of 5 to 10% of your allocation is going to go into this private equity, that is not going to move the needle on your return. Like, stick to your old boring stock bond allocation. Find the cheapest you can get, the most transparent. tracks the market as an index. Let's focus on other things.
I mean, that's kind of what's been proven. It's not sexy. It is not sexy. It is very boring. I get it. But that's what's been proven that works. If you focus that other time on changing your behavior to get more in your 401k or save taxes elsewhere over here, that's probably going to make a bigger difference.
Agreed.
Yeah.
Do you want to do a bow? Because your bow has a sound effect already.
It does? What's my sound effect? I have one question. You think that target date funds, like the Vanguard target date fund, is now going to start putting private equity in there?
I wouldn't say a Vanguard would do. I'm sure some others are going to do it.
Okay. My bow is look out for this, but you're probably not going to see any changes until 2026, maybe 2027, if the DOL changes this. And Dave and I will come back and share what we're seeing in our clients' investments, how they're changing, and do a podcast once we start seeing what investments are kind of going into these 401k funds. But for right now, nothing should really be changing for you because I don't think any 401k plan sponsor is going to want to take the liability risk until the DOL changes their rules.
All right, before we go into highlights, if this is your first time watching this podcast, thank you for coming in. You don't need to do anything. If this is not your first podcast with us, please like, share, subscribe, follow, make a comment, send it to your mom, do something which helps us expand our reach and get some information to more people. Thank you. Highlights is our section of the podcast where we share something personal. You get to know us a little better. It may be about work, maybe about family, but you got to listen to find out. HT, I see a construction update here.
Okay, yes, construction update. I have never seen my slabs. Mind you, remember, I have to buy 8 of them.
Mm-hmm.
And the only way I saw them was a video, very blurry, while I was in Italy. They are finally going in our kitchen a week later than they were supposed to. But I saw them. They're beautiful. There's a lot of detail going around my island that I didn't expect that my designer put in. Like, it's not just like cut. It has etching in it. It's really cool. And there's a waterfall on one side. And I'm like, okay, we are making progress. I have this deranged thought that I'm going to be in my house in a week and a half. My husband is at do not talk about the house.
Well, you said that it was a week late. I'm actually impressed. That's almost like on time.
It's not the bar I keep. When things are said that they're going to happen, I want them to happen. When they say they're going to happen. I know that's not how construction works. I understand.
I was going to say, you're talking to the construction industry. They don't work on our timeline.
Yeah, but the slabs are in. It is beautiful. I am starting to get really excited. I am delusional right now that I'm going to be moving into my house in a week and a half.
I hope you do.
Your personal update is hysterical. I can't wait to hear the story. I just see the bullet point and I'm like, okay, please tell the story.
Okay. Well, technically today is my wedding anniversary.
Happy
19
wedding
years.
How many years? 19?
19. We got married as babies. Yeah. I'm really only 24. So
19 years? Okay, I'm sorry. That's just, okay, I'm sorry. All right.
That was rude.
That's a long time. I mean, my husband got married late in his life. I didn't, but we're on like 8 years. So it's just, that's a big difference. I don't know what I'm going to feel like at 19 years.
I got married at 24.
So young.
Mm-hmm.
Okay.
All right. So let me kind of set the scene. Do you ever like schedule a day and then you're really looking forward to it and you get to the day and you're like, I don't feel awesome. So the whole day plan we had for our wedding anniversary was, going to botanical garden, going out to a nice dinner, leaving the boys at home. I don't know if it was food poisoning, like a mild case. Something wasn't right. We ended up just going out to dinner, 45 minutes, coming back home. But we celebrated our wedding anniversary, just not the style that we thought it would be.
Well, I'm proud of you that you celebrated it, but that does suck. I always worry about that.
Well, people were like, oh, you went to this restaurant? Like, went to one of our favorites. And like, what did you get? I was like, I ate the bread and I had like grilled chicken and a salad. And like, why? And I'm like, you don't need to know. but that was as much as I could handle. And like Sarah was like, should we get this? I'm like, you can.
Oh,
I might
you were not in
repeat
good shape
it everywhere.
I am so proud of you that you went though and celebrated. And congratulations on 19 years. That's really something to be proud of.
Thank you. All right, as we come to the end of our podcast, thank you so much for listening to this episode. If you want to listen to the audio version, you can listen to it wherever you find your podcasts. If you want to watch the video version, it's on YouTube, LinkedIn, Instagram. If you want to send us a question, you can do. We're at hello@playbookotw.com. And Jordan's coming up. He really wants you to listen to his disclaimers. So please stick around to the end, and we'll see you next time.
Toodles!
All opinions expressed by Dave Grant and Heather Townsend are solely their own opinions and do not reflect the views of their respective wealth management firms. This podcast is for informational purposes only and should not be relied upon for investment decisions. Nothing in this material constitutes a solicitation for the sale or purchase of any securities. Clients of Retirement Matters and Townsend Financial may maintain positions in the securities discussed in this podcast.